Welcome to Grow and Gain Finance. If you've been thinking about investing but didn't know where to start, this video is for you. Investing in 2026 isn't about chasing trends or getting rich overnight. It's about building systems, growing steadily, and making money work for you on your terms. In the next few minutes, we'll break down the basics, simplify your options, and help you take your first confident steps towards long term wealth. No overwhelm, no hype, just a clear roadmap to get started. Let's address the obvious question: why invest now? First, inflation. Money sitting still is losing value every year. Investing allows your money to grow faster than inflation, protecting your purchasing power. Second, compound growth. Time is your biggest advantage. Even small amounts invested consistently can grow exponentially over decades. Starting early matters more than starting big. And finally, financial freedom. Investing creates options, flexibility, security, and the ability to live life with less financial stress. The sooner you start, the more leverage time gives you. Before investing, you need to understand the language. Stocks represent ownership in companies. They offer strong long term growth but come with short term ups and downs. Bonds are loans you give to governments or corporations. They're generally more stable and provide steady income. ETFs and mutual funds bundle many investments together. They spread risk automatically and are ideal for beginners who want diversification without complexity. And your portfolio is simply your full mix of investments, designed around your goals, timeline, and comfort with risk. You don't need to know everything. You just need to know enough to start smart. Where you invest matters just as much as what you invest in. Retirement accounts like Roth IRA or 401k offer powerful tax advantages and are built for long term growth. Taxable brokerage accounts give you flexibility. You can invest, withdraw, and use your money for goals outside of retirement, no penalties. The key is alignment. Your accounts should match your goals, whether that's retirement, buying a home, or building a general wealth. Strong foundations lead to stronger outcomes. You don't need complexity to win. Start with low cost index funds or ETFs that track broad markets. These give you instant diversification and historically strong returns. Next, balance risk with your timeline. If you're younger, you can take on more growth focused investments. As goals get closer, stability becomes more important. And most importantly, stay consistent. Trying to time the market creates stress and emotional decisions. Investing regularly through dollar cost averaging keeps you disciplined and steady. Simple strategies outperform complicated ones over time. Success comes from habits, not luck. Automate everything. Set up automatic contributions so investing happens without effort or emotion. Protect your safety net. Keep 3 to 6 months of expenses in an emergency fund so you're never forced to sell investments during downturns. Master your mindset. Markets rise and fall. Emotional reactions hurt returns. Calm, disciplined investors win long term. And finally, review, don't obsess. Check in quarterly, adjust when needed. Avoid daily monitoring that leads to impulsive decisions. Wealth grows quietly through consistency. Here's how to move forward starting today. Open an account with a trusted platform. Many have no minimums and are beginner friendly. Start small. Even 25 or 50 a month builds momentum. Progress beats perfection. Keep learning. Education compounds just like money. And think long term. Investing is a marathon. Time in the market always beats trying to time the market. The best time to start was years ago. The second best time is now. This is how you grow and gain.